Good afternoon, everyone, and welcome to the digital stage at Startup 2021. I'm Rasheen. I am the zone manager for the digital stage. So it's so great to see so many of you joining this stage. This afternoon, we are going to be discussing how to adapt in the post-Brexit era for British businesses. So I'm joined by Taimur Ghafoor, the senior accountant at Osome. Hi, Taimur. So great for you to be joining us today.
Thank you. That's good to join.
I can't wait to see everything that you're going to be talking about, and I'm sure there's going to be lots of questions from people who are joining in as well. It's obviously a very hot topic at the moment, and I think businesses will have a lot of questions, a lot of support they need for running their business in the post-Brexit era. So for those that are just joining the stage, if you have any questions about today's event, then please post your question in the stage chat, not the event chat. We don't want your questions to get lost in the event chat, so we won't be able to see them. So yeah, post any questions in the stage chat, and yeah, then we'll get started with today's session.
Lovely.
I will hand over to you.
Great stuff. And thank you for the introduction. Good afternoon, everyone. My name is Taimur. I'm one of the senior accountants here at Osome UK. So just a quick introduction. Osome is an online accounting and bookkeeping platform that works through your books on an automated and paperless system. So we have created a very minimalistic app, and that's all you do. So you just go into the app and treat your bookkeeping and accounting day-to-day basis, where we take care of everything else through automation. And today, obviously, we're talking about Brexit and why it's important for you to understand all the basics of it, to continue trading the way you have been trading previously, and how it will affect you going forward. So the topics that I would like to cover today is Brexit and what does it actually mean for your business. How VAT is connected to business. So out of all of the different types of taxations, corporation tax, PAYE, why is the VAT most important element for Brexit? We'll then touch on how to continue selling in EU if you're a UK-based business. Again, because of the new border restrictions, you need to know exactly what's happening for your customers in EU, or even if you're getting your goods from EU into UK from suppliers, what happens? Then we'll touch on Brexit impact on small and medium-sized businesses itself, how they're affecting you in real-life examples. And then not related to Brexit itself, but because of this whole border issue, UK itself has generated new rules on e-commerce and VAT rules for UK business individuals. And we'll just talk a little bit about that and what are the new rules from 1st of January 2021. The last topic would be if you're using an online marketplace to do trade like Amazon, eBay, and if you're using the fulfillment center, what do you need to do to continue doing that? Or if you're using your own export system, what happens then? So to start with Brexit and what it actually means. As you know, from 1st of January 2021, United Kingdom is not a part of the EU single market anymore. Now, this transition, as you know, started in March 2017, and it almost took 4 years. But on 24th of December, we finally have the last deal, and we know exactly what we need to do. We've been speculating it for almost 4 years on what it would look like, but now we know. And what it has done is created this barrier between the UK and EU, where before, obviously, there was no barrier. You could have posted your goods, sent to the UK, sent from UK to EU without any restrictions on it. You used Amazon FBA, for example, to sell from UK marketplace to EU without any restrictions or any other implications. There were some thresholds, like if you go above 27 to 100K in different 27 countries in EU, you would have to register for VAT. But if you were below the threshold, which most of the small businesses are, you are free to trade. But now all of that is gone. You got custom declarations, checks, and product checks, import VAT, and all the other paperwork in between to finalized before you can send those products out. This involves a lot more paperwork, a lot more cost, and a lot more time on your end. And obviously that reflects on, should you continue given if it will still be profitable for you, or should you try different means and see how you can still be profitable in those areas if you're still using those trades. Distance selling, as I mentioned, is what EU still has in their own jurisdiction. So whichever countries are in EU zone, they can still use that, and it's something which is is the threshold for each country. So, for example, Germany has it at 100,000 euro, where other European countries has 27,000, and as long as you're below that, you're not asked to register or submit VAT in those countries. But because UK is out, obviously now you need to, so you're not part of that distance selling threshold anymore. So why VAT? And why is VAT the most important element of this whole Brexit situation? To understand that, let's talk about what VAT actually is. So VAT is a consumption tax. And you already, who you are doing business, you know that the end user pays the final taxation to you, and you collect it on behalf of the HMRC and pay back to HMRC. Now, when the item is consumed in a different border than your home country, then you need to apply those rules on of those countries. And that's where this Brexit implication on VAT is coming in. If the item is consumed in Europe that came through UK, then the whole border kicks in, and you need to start filing and implying all of those rules that have been set in. If you talk about just UK itself, there are three different types of VAT: 20%, 5%, 0%. Now, 20% is mainly applicable to most of the goods and services. 5% is mainly for the children car seats, home energy, and any other basic stuff which is not a normal routine stuff. 0 rated for food, like milk, meat, and stuff like that, and children clothes. So what you really need to do is understand which product that you're selling and what implications, VAT implications are applied to you. So you need to know which rate is applicable and then applicable to you, and charge that to the clients and collect that money on behalf of the customers. Now, how is all this affecting your business? Your pricing goes up. Price per unit needs to go up. Your end customer is paying more to you if they are paying to someone who is not a VAT registered business. So either you increase your price or you stay competitive and take a hit on your profit. But then again, there's the other side of it is the input VAT. That the VAT that you pay to your suppliers is something that you can claim back. Again, as I mentioned, these rates are applicable for UK only. And the point I'm trying to make here is that similar to these VATs, EU and different EU countries will have their own VAT rate system. So some EU countries have a standard rate as 21%. So even if you're selling in European country and you need to know what VAT charges there are, so you can then use it according to judge if it will be a profitable system for you or not. Now, VAT is a very simple taxation system, but again, there's a lot of complications in it. So it's simple, but it's complicated. And when I say simple, it means that if you look at the description of it, it is whatever you pay to your suppliers. If they charge you VAT, the money that you've paid is called input VAT. Now, instead, whatever you've collected is on behalf of HMRC from your customers is called your output VAT. The difference goes to HMRC. So, but to that, it looks really simple and straightforward. But when you actually dive into it, and when you're expanding your business from UK as a small business, your business is going good. Now you're planning to go into Europe. You're going to start worrying about import VAT. Now that's an additional cost to your business. Now, different countries, different rules, different processes. There's a bit of a complication there. What can you claim and you can't claim back? So an example here is that a VAT on entertaining your clients. You're going to expensive restaurants, trying to win that client. You pay VAT on those transactions, but you can't claim that because that's a non-allowable expense. The other thing is the difference between zero rate and exempt rate. Again, these are examples that shows you that VAT can become really complicated, and you need to know exactly what you're doing with your VAT. Otherwise, you will start losing money on it, and especially cash settlements, because VAT is a cash payment to HMRC on every quarterly basis. So you either pay them every 3 months or monthly basis, depending on what agreements you have. But VAT can have a high impact on your business. And that's why it's really important to understand the whole Brexit situation and to understand what VAT liabilities you will have in place in order to make sure that you still stay profitable and not end up losing money on it. Now, if that all dials down to what it actually means and how you can actually continue selling it. So we discussed that you can't continue selling on under distance selling threshold. That's gone. We then discussed how VAT is applied to all of this situation. What is the next possible option then? So so far what I've read, there are 3 different options that you can apply and see if what works best for you. And to get these 3 options, you need to first identify who's the importer of goods. So from your end, from UK, you still need to do the export of goods, and that will still involve having an EORI number, doing the custom declaration, and finding a courier who will post that for you with extra expenses. But you still need to identify who the importer would be. So as soon as your goods leave UK and reach EU, at that point at EU customs, the EU customs will ask who is the importer of these goods. Now you have 3 options on that. The first option is your end customer. So what will happen is your customer in Germany, for example, ordered something. You post it from here. It will sit in German customs, and your customer will receive a letter or a mailman knocking on the door saying that you need to fill this form and pay the import VAT until you get the item released. So if you declare the importer of wood as your end customer, this is what they will do, and they have to pay the extra bit to get their products inside into their home. And that's not the best experience, because you're asking your customers to do extra paperwork and extra money on top of what you've already sold them. And I'll show you a news that we saw yesterday, that how at least 30% of the imports went from 1st of January up until now came back as a return, because the end customer wasn't happy paying the extra and doing the extra paperwork. But again, that's one of the options. The second options, which I have not seen written anywhere, but I've spoken to DPT and other couriers, and what they're saying is that they will take the responsibility of being the importer of goods, and they will do the filing and the paperwork plus pay the import VAT. And for that, I asked the pricing, and just to give you some example, they will charge you £3.85 for a standard delivery, for example, and they will charge you £5 extra for the import VAT. And that's £8.85 extra on your product that you would need to pay extra to DPD or any other courier. That will help you clear the customs and pay the import VAT on spot. And your end customer wouldn't need to do anything. It will be delivered to them. Now, again, this is an option. This is something that is being offered at the moment. The pricing I told you was a complete pure example of one of the standard posting that I was doing. It could vary from different couriers to couriers, but this is an option that you can apply for. Again, the point is that it is expensive, because imagine if you're just selling a product which is £10. Now you need to pay extra £8.85 on top of it just to get it delivered. So your margins will not play well with you. So you need to make sure that obviously that is under still profitability margin. The third option, which is the most favorite option and preferred and advisable option, is to register yourself for VAT in that country. Again, this is again an expensive option, but again, it depends on how well you're doing in Europe, and do you still think it is a profitable market for you. And if it is a good market and you think it will still benefit selling in that market, then what you should do is register yourself in the country that you're selling. What that will do is, once registration, that means that you will now start to pay VAT on those countries and do the submissions on VAT, similar to what we do in UK on quarterly basis. So you would have to register for VAT, pay the VAT on time, and do the paperwork for VAT as well. The good part on that is any import VAT that you have paid during the importation in Europe, you will be able to claim that back against the output VAT that you would be charging your clients or your end customers. So in an essence, it might work better for you, because there will be an input and output VAT that you will be able to claim. But again, there will be some extra cost from accounting perspective and finding someone to do your European VAT perspective. The rule is that if you're in the UK and you're selling, for example, you're selling in Germany, then you're selling from the inventory in UK and that's getting posted to Germany, you need to register in Germany. But again, if you start posting in every different country, you need to register for each country you're posting into. So again, it could be a situation for you're really good at Germany. Germany is a good market for you, but you have few customers in, let's say, France or Italy. The rule is that you need to register for France and Italy as well if the inventory is coming from UK. The other way around is that you take a portion of your inventory, register yourself in Germany, put all of your inventory in a Germany warehouse, do all the paperwork, VAT registration, VAT submissions, and payments in Germany. And from that Germany warehouse, you fulfill into other European countries. And if you're doing that, the distance selling threshold kicks in. So as I said, for an example, if one of the European countries is distance selling threshold is 27,000 European currency, you will only need to register in that country if you're reaching the threshold. So, but again, there's the downside to that is that you're blocking a lot of your inventory in Germany in a hope that it will sell from that market. So yeah, again, there's a lot of analytical system that needs to happen in place for you to understand what your markets are. Because registering in each country for the ease of just sending the goods from UK to EU and doing the VAT is again a very expensive option. It's a doable option but expensive. So better to register yourself in one place and do the distribution from that area. So these are the three options at the moment that helps you still continue selling in EU. But with the third option, where you register yourself and you take the sole responsibility of declaring that import, VAT, and customs, there are quite a few other things that you need to be mindful of. So the first thing is the customs and EURI. Now again, this does not relate directly to accounting, but for information purposes, when you are filling the custom declaration form, these are the things that you would need. Your VAT registration numbers for both UK and EU, your EURI number, official business name, business registration documents, your personal director's photo identification, and HS code. Now, HS code again is an important element here. It's the code that you can use to identify your product line, and you can go online and check what that code is made of, and you get about, I think, 6 to 8 digits code, and that will tell you exactly what your cost of customs would be. So you need to enter this. You need to find this code out first. Enter this on your custom declaration so that they can charge you accordingly. And it's quite easy. If you go to the Gov website, type HS code, you can get all the codes. Then you can find out which one is more applicable to you. Then we need an EURI number. Again, you need this in order to transport goods from UK to EU or even from outside UK into EU. And the flow of the goods is, if you are trading between UK and EU, you need UK and EU EURI number. Again, you can see vice versa, you need these two EURI number. If you are doing from getting products into the UK and selling it outside UK and EU zone, then you just need UK EURI number. So these are the EURI numbers, and it's quite easy to apply for one. So the website is gov.uk/EURI number. It takes about 15 minutes to fill that up. You just need basic information like your VAT registration number, if you're a sole trader, national insurance number, business start date, SSC code, and gateway login ID detail. That's all you need for applying for one. And once you do, I think the timeline is from 5 days to 15 days, you will get the EURI number. One last bit on continue selling in EU is fiscal representation. Again, this is again the important part. If you're registering yourself in one of the European countries, you need this now. So 19 out of 27 EU now requires a fiscal representation if you're doing EU VAT submissions there. Now, the reason this fiscal representation is there is because they will take equally or severely accountability on your VAT. So for example, if there's an incorrect VAT submission, then the accountants in European side of the border will be accountable for it as well. So they take half of the share of your accountability, which means that it could be an expensive thing because they would charge you not only for the professional services, but also for the liability as well. So you need to be mindful if the country that you're trying to be a VAT registered business, do they need a fiscal representation? And if they need, then it could be an expensive thing. Now, each country has their own requirement. I got some examples here. Because of the trade deal we've got, the good news is some countries like France and Italy, they don't require a UK to have a fiscal representation. But Poland, for example, they need a fiscal representation from day one, from 1st of January. And even if you had any tax liability from last year that you will be submitting this year, they need it to be present for that submission as well. Where Spain is saying that they will kick it in March. So from March, you need a fiscal representation. So each country is doing a completely different way of this requirement. And some examples are Germany and Sweden. They don't require any fiscal representation. Your UK accountant or you yourself can do the VAT registration and submission. Where Australia, Bulgaria, Croatia, Greece, Hungary, Portugal, as some example, they need a fiscal representation. So you need to get someone on the other side of the border to help you do this. Without that, at the custom borders, when your goods reach EU borders and they don't see a fiscal representation, again, they will block your goods. Again, this is another expensive element of still continuing to trade in EU. Now, how is that all impacting your small businesses? There's a news on BBC yesterday morning that's saying that retailers warned they could burn goods stuck in EU. So what is happening is, as I mentioned, about 30% of the item bought online were returned, and one of the major reason is there's general refunds. Customer don't like the product, they're refunding it. The other is most of these retailers put the importers of good as the end customer, and when the customer received these goods, they were like, no, we are not filling any paperwork, and we are not paying anything extra on top of we have already paid. So that's why it's not a good customer service. And you can see almost 30% worth of goods were sent back. What is happening is that these goods are now sitting in EU borders, and because to get the items back into UK, they will cross the border again, and they will again imply the import VAT and the custom declarations and custom duties. So most of the retailers, like Adam Mansell, the boss of Fashion and Textile Association, said it's cheaper for the retailers to write off the cost of the goods than dealing with it, or either abandon or potentially burn them. So that tells you how impactful this could be. The big retailers are struggling with it. Imagine what it will do to small retailers who's trying to sell between cross borders or any other goods as of that. Obviously, that also means that you need a lot of manpower. You need extra people to help you get through this documentation. So you need someone specific in your organization who will just be, responsible for that, making sure that all the customs have been done and the items being returned is returned in a meaningful way that's not incurring extra cost to you. So it's a huge task basically, and it is just if you're not careful and if you don't understand the whole system, sending your goods to EU at the moment can cost you a lot more than you would make in return. So yeah, in an essence, you need to be really careful on how you do this, and you understand that you know exactly what you need to do. Some good news. It's not all bad and it's not all complicated, but the good bit is that UK has introduced something called a deferred VAT scheme, which is called postponed VAT accounting. Now, rather than paying cash on spot when you get the goods into the UK, as of now, you have to pay the import VAT on customs before you get the products into UK borders. What they're saying is you can apply for a postponed VAT scheme. They will give you an online portal which will show all of the goods you've brought in and all the import VAT that have been charged to you. And rather than paying the cash, you put it on your next VAT return. So it will become a part of your VAT return, and you don't have to take out the cash. So better cash incentive or slightly better cash situation for you. For accounting purposes, if you do your VAT yourself or if any accountant does for you, all you need to do is whatever the VAT value, import VAT value is, you enter it on box 1, and box 4, the one that you're claiming back. And in box 7, you enter the full amount of the import itself. There are 9 boxes when you do a VAT return. So these are the boxes that will affect the import VAT system. And that's all there is. So import VAT will now become kind of a paperwork for you. And the same situation that I explained in the beginning is all the input VAT and output VAT, the difference is what you pay to HMRC. So import VAT will become a part of your input that you do on the calculation, and whatever the output is, the difference will go back to HMRC. So the amount that goes back to HMRC will be less on your quarterly basis. So that's some good news. And if you're registered in most of the EU countries, some of them already have this situation. UK has just introduced it as 1st of January. So that is something that to look forward as well. Moving on to a completely different topic. Again, with Brexit came some new rules about the implications of e-commerce sort of things. Now, UK has introduced something called £135 rule. And to understand this rule, we need to find out, let's find out what UK is thinking behind this. So they believe that this new rule will be an effective way to collect VAT from the UK businesses, and it's more competitive now that we are out of the EU zone. At the moment, I think in EU it's 22 euro. So if your goods that you're selling to euro is less than 22 euro, I think the implications of VAT is different. In UK, it was £15. So as long as the items coming into the UK, the consignment value is less than £15, there was no input VAT, and this was called a low consignment item. That is changing. So the £15 is now increased to £135. And the rule is that the goods delivered into the UK were outside the UK at the point of sale, and they're less than £135, you don't need to pay any input VAT on it. So you wouldn't be required to pay the cash upfront. So what will happen is they will come to UK and they will go to your customers directly, and all you need to do is at the point of sale, you charge the 20% extra to your customers. Again, just to understand this in more detail, let's look at the competitive aspect of it. Again, any item or any consignment which is less than £135 coming to the UK, no input VAT, you charge the VAT on them at the point of sales. So if you are operating in a marketplace, you don't need to do anything. You will get the orders from your customers on Amazon or eBay or any other marketplace. That will be less than £135. The order will be shipped from outside the UK, from China or any other fulfillment center, and will go directly to your customer. And your marketplace will be the one to charge extra to your customers, the 20% VAT, and submit it to HMRC. So from your business perspective, if that's the business model you're working on, you don't need to do anything in VAT terms of situation. But that does mean that your price either will be 20% higher because the VAT is now implied on sale rather than import, or you will have to take a hit on your profit and reduce your profit to accommodate that 20%. If you're not operating in a marketplace and you're selling it on your website, Shopify, or any other different platform, then the responsibility of charging the VAT and collecting and submitting to HMRC falls on you. So everything else stays the same. No input VAT, no nothing. But when your customer is ordering the order on your website or Shopify, you need to charge them 20% extra VAT and submit that VAT to HMRC. So the difference is either you're selling on marketplace or on your own platforms, and the VAT will be paid by depending on which platform you're using. So one of the major questions I really get asked is, what is the £135 and what it's made of? It's the intrinsic value, the consignment value. So the value of the total sales order. It's not the value that your cost is. It's the value of how much you sold it for. And one consignment is all of one order. So it's not per item. It's all the orders in one package. And whatever the package you sold it for is your intrinsic value. And that £135 rule is based on that. So there's a lot of confusion. People ask, look, this package contains 10 different items. They are £10 each. Unfortunately, that's not how it works. It works on order basis. It excludes transport or insurance cost until unless it's included in the price and not shown on an invoice separately, and any other taxes. So you're not counting your VAT on it. You're just charging the basic net sales value. Again, one last thing on this is, what is a marketplace? The definition of it is that it facilitates the sales of to customers and the suppliers of it. So marketplace is something that will tell you how the terms and condition of how the goods are sold and supplied. and how the payment system is facilitated. Like Amazon, it tells you exactly that the customer needs to pay by this means to this customer and that terms, and their written policies as well. So if a platform is doing all of that, then they're the marketplace rather than us or Shopify, like for example, where you are the one who define all of that. And Amazon, as you know, they're also involved in ordering and delivery of goods, so they're the marketplace, or eBay. But if you own your website, then you're not a marketplace. Then you need to record the sales of VAT and submission of it yourself. Now, all of this implies that the VAT registration system changes. Now, in UK so far, the rule was that if you're outside the UK and selling into UK, the threshold was 70,000 for European and no threshold for anyone outside UK. And for people in UK, UK businesses, the threshold was £85,000. That changes. The threshold is still the same. If your business is a very simple business model, you're buying from UK, selling into UK, £85,000 still there. But if your business model is made in such a way that you sell and then you get the items inside the UK, then you need to register for VAT if you're not a marketplace. Or if you're not trading in a marketplace. If you are trading in a marketplace, then Amazon or whatever the marketplace is, they take care of it. But if you have your own business, your own website, and you're selling through it, and at the point of sale, your goods were outside the UK, then you need to register for VAT from day one. So just be mindful of that. Most of the people will think, the £85,000 is the threshold. It's changed now. For the consignment value less than £135, you need to register for VAT. If your consignment values are more than £135, you will pay input VAT, and it only makes sense to register for VAT to claim that money back. The last topic for today is marketplaces and e-commerce. So if you're using Amazon NFBA or Amazon FMN, what happens? So selling on a marketplace, you need to do extra custom clearance and VAT if you're crossing borders between UK and EU. Most of the major marketplaces will block your EU and UK goods if they're not first cleared through customs and VAT. What that means is that if you're using an Amazon FBA, for example, Amazon FBA so far before the Brexit, any person of your anyone in the EU can order from a UK market without paying any extra or doing any extra declarations. But now, if a European customer is ordering from a UK marketplace, they won't be able to order it or get the items delivered to them. It will get stuck in the customs. So really not a good idea to still keep selling to a European market from your Amazon marketplace. Similarly, if you have a business in EU, you cannot order from UK. So what you need to do is have two sets of different inventory. Send one set of inventory to any one part of European, like Germany, France, and register yourself for VAT and do the fulfillment from there. So from that one country, again, the same rules applies, that distance selling threshold, you will be able to sell inside Europe. And then you have to have UK inventory, which will only apply for the UK market. So at the moment, unfortunately, the FBA won't work between two markets. If you're using Amazon FMN fulfillment center, then you need to do exact same things as you would have done as an option 3 to declare all of those taxes and register yourself. Custom declaration on export import. You need to know your HS codes and compliance with the product safety regulations as well. So unfortunately, all of that kicks in now if you want to keep selling on Amazon MFN. This is exactly what I said. If you're an online seller in UK, you will need to store goods in EU to have the inventory fulfilled in EU market. If you're in EU marketplace, then you need to get your items stored in UK. Inventory split will be between two countries. You can't have inventory in one country and still keep trading. Okay, so that leaves us to the last part of what we are and what we are doing. So we are an e-commerce specialist, and the pricing model we have come up with is a very transparent monthly basis, which is reviewed on quarterly basis. So if your e-commerce business is doing really good at some point in time, and if it goes down, the price will go down. So we grow as you grow. You get a dedicated accountant and unlimited advice and support on issues like Brexit, COVID-19, anything else that can affect your business. And if you need some advice, you can just simply type a message on the app and you will get the next consultation booked in. Our whole system is automated. We use e-commerce platforms to automate the whole sales with the correct treatment of it, and plus as I said previously, there's no paperwork involved. It's all done on automation basis. I have a quick demo to show you the minimalistic app we have, and it is quite simple and straightforward. So this is the first page you get. This is where you ask any question. Again, for mobile app and web page, it's literally the same minimalistic approach. It will show you the history of chats we are having, and you can ask anything new and just start the conversation. Your dashboard will show you connected with your accounting software on what your total cash situation is, account payables, receivables, and in detail of what you need to pay. Your accounting tab shows exactly what are the items that we need documentation from. So it will tell us what are the items unreconciled and how we can reconcile them. So you can either upload that by using the blue button, take a picture of it, or you can leave a comment next to it. Then you have a specific page for your company with all the deadlines and a specific email showing you exactly how you can start uploading your documents. And that's where you can, that's a specific email just for yourself to send us documents or copy of your invoices. And filing is a storage system that we have. Anything that you send us from any means will get stored up here with the search system. And again, you can use this to upload documents to us, either by taking a photo or just scanning a document to us itself. And yeah, and that's all you need to get your bookkeeping and accounting done. And that's all there is with all the minimalistic approach and support. You can get all that sorted. And the last bit I would like to say is thank you for the partnership, Enterprise Nation. Any customer who wants to try the services, you can get £100 off voucher on your first month for any bookkeeping and accounting packages. Just leave me a message, and if you would like to join, we have a landing page for you. So my colleagues Demi and Yin has probably been chatting with you just to find out if there's any further questions. But yeah, if you come on board with Enterprise, you get £100 off on your first bill. We will jump to live Q&A session. Just on that, before we start, Brexit is a very complicated situation. So just a disclaimer, I'll try to answer as many questions as I can, but if there's any specific scenario where we need more thorough reading and understanding, I'll be more than happy to take your email down, get the question written down, and get back to you on it as soon as possible. So yeah, let's start with the questions, and you can email me, DM me your email IDs for further questionings.
Thank you so much, Taimur, for going through everything related to the post-Brexit era. There's been lots of questions that have come through on the chat as well, and you went through so much information with all of us. So I'm sure that everyone would agree that the advice you've given to everyone is going to be really valuable going forward as well for their businesses. So yeah, as I mentioned, we had a couple of questions coming through. So the first question is, you mentioned VAT registering for small businesses. How does someone go about registering themselves in the country they're selling in?
So there are quite a few different ways. So again, the country that you need fiscal representation in, you need to hire a local accountant to do that for you. For the countries that are not like Germany, they have an online portal, and I've tried that myself. It's a very complicated, and it takes about 10 weeks to get that done. So the best option at the moment is to get yourself a fiscal representation in Europe. So for example, we ourselves, for all of our clients at the moment, who are thinking of expanding their business in Europe, we help them get the registration done. And we have partnership in place in Europe who act as fiscal representations for our clients. So the point is, you can try yourself in a country which does not require fiscal representation, but it's a very tedious process. So it's better to get someone who can do it, because it requires also monthly submissions as well. So it's not a simple and easy task.
Okay. No, that's great. Thank you. And thank you for answering that question. We had a few questions come in from food and drink startups. So I don't know if you're able to help answer those questions. Are there any restrictions on importing food from European countries?
So the restriction, there's no restriction, but there is now a declaration that needs to happen, which is health and safety certificates. And so if there's an item which is not a normal, like clothing or something that is the consumable, basically, you need to have further certifications on it. Like, are this safe to travel? And it's a similar rule if you were getting some food or drink items from anywhere outside UK zone. You need that certificate to ensure your items are health and safety regulated. And so if you have that in place, and your custom clears that certificate, then you're okay to transfer the goods.
That's great, thank you. And yeah, another person asked where do they find out what implications applies to my food startup business. So I think you've answered part of that as well. And we do also have, for those that are starting up a food and drink business, some new e-learning on the Enterprise Nation platform as well. So please do check that out if you need some support with that. So the next question that we had coming in was from someone who was worried about selling online to to customers in the EU, as they didn't have time to fill out the forms and the customs forms involved for shipping, mainly because they have no idea how much it will cost. So I don't know if you're able to share any insight on that.
So just to understand the question, so they are an online business who are selling from UK to Europe, and yes, they want to know what implications there are.
Yes, exactly.
So again, if you're selling directly from your UK business and the inventory is in UK and you're selling that to EU, there are three options, as I mentioned. Either you make the end customer your importer of goods, and they pay and they do the custom and pay the import VAT. You ask your couriers to see if they will charge you extra to do that for you, or you yourself need to register. The unfortunate thing is, even if you're selling a pound's worth of goods in any of the country with a consignment, I think it's more than 12 or 22 euro. I'm slightly confused on it, but yeah, if you're continuously selling in euro, you need to register for VAT from day one. So there are three options on how you do that, and you need to decide what's best for your business on that end.
That's great, thank you. And so so slightly related to that, and more talking about VAT, because I know you focused on that for a little while. So someone asked, if you're a small business below the VAT threshold, do you have to register for VAT to get an EORI number to ship abroad? Is someone that sells less than £1,000 to Europe, or is it just better to not sell to Europe in that case?
No, so the VAT registration number is not a necessary element for EORI number. EORI number is a specific number for your custom declarations as well. But again, country to country dependent. But if you're selling in Europe and if you're in UK and selling in Europe, you need VAT registration number regardless now. So you need to do that. But if you're going to make importer of goods your end customer, then you just need an EORI number for EU. So again, it all depends what model you're going to select. And but the answer is you don't need VAT registration number for specific EORI number.
Fab, thank you so much. And just to recap, because I know you went through the EORI number. What do you need for registering? Can you just remind everyone?
Yep, let me open my notes.
Thank you. Because I just know from my own research that was something really important to make sure you've got sorted. And I did put a link in the chat to everyone as to more information on gov.uk as well as to how to get that number.
Yep, indeed. I'll quickly share my screen again just to share that slide.
Thank you.
So can you see my screen?
Yes.
Okay. So yeah, the flow of goods and what EORI number you need, and the requirement for EORI number is your VAT registration and registration date. Again, this is not a compulsory thing. You can get EORI number for export or import only. But if you need an EORI number that will help you with everything, you need VAT registration number. Again, I know it can sound a bit confusing, but for example, if you're just an importer of goods into UK, then you don't need the VAT registration number. You can just get an EORI number without having a VAT registration number. But other things that you need is, if you're a sole trader, you need NI number, your UTR number. Otherwise, you need your business start date and SIC code and government gateway details. If you just go to the www.gov.uk/EORN, that's that website there. The form is like a 10 lines form, and it takes about 5 to 10 minutes to fill it, and it will tell you exactly what you need, and you get the EORN number within 10 to 15 days.
Fab, thank you so much. And one final question. Someone listening to the stage sells services to the EU. So if someone provides an online virtual event, are there any implications for that person? Yeah, basically. And if they do an in-person event, are there any implications as well? I'm not sure if you're able to answer that question.
The reason I didn't cover sales in this one, because sales is a complete different platform, and it has a lot more implications to it. So all I can say on this is, and again, I can take your email and get more details to you, but at the moment, all you need to understand, the way you were trading in sales services side of things in EU has changed as well. So there's a lot more implications to it. The thresholds have changed, and you need to be more careful on how you provide services to EU side of things. So again, it's a completely different broad topic that needs to be covered, and people are struggling with it. But yeah, if you email us, I'll be able to get you more details, specific details on it.
That's really helpful, thank you. And I know it was Andrew who asked that question. So Andrew, I hope that helps as well. So thank you so much for Taimur and the rest of the Osome team as well, for going through everything in the post-Brexit era, as well as answering most of your questions to do with supporting your business during this time. If we weren't able to get round to your question, do please contact the Osome team.